But Sahura, we with you with the global economic outlook in the week ahead, which is going to be the week 49 of 2025, the first week of last month in the year. As always, let's first check what we had previous week, and then we can go forward and check the week ahead, and we will see what we have in the week ahead and what we can expect from the financial markets. Last week, it was a shortened week with the Thanksgiving holidays in the United States at the end of the week, and at the beginning of the week, we had a holiday in Japan with the Labor Day. So that's why generally the markets generally the liquidity in the market was low in last week. The risk of market also was if you look at the charts as just like a VIX chart, it was low and lowered towards 18, but with the less liquidity, usually we have more risk in the market, especially with the specific thing that happened with the CME group and their we know that the trades in some symbols like gold and some forex markets, it was banned and had some problems with the data center. I think it was because of the power problems that they had in the data center, something like that. But anyway, generally, so many traders they couldn't close their positions at the end of the week. Anyway, these all these data in line with the other changes in the market, geopolitical changes in the market, with the ongoing talks for the Russian and Ukrainian war between the Russia and United States in one hand and Ukrainian with the European in the other hand. Generally, the market risk was low. Looking at the economic calendar, Monday started with the holiday in Japan, as mentioned, and then we had a German current and generally the business confidence and climate data, which was not so good. Even thought that German current expectations, current sentiment slightly gets better from 85.3 to 85.6, but generally still less than 100. And we can say that the German economic confidence, German economic expectations, and even the estimates are all of them they're facing with more challenges, showing that the German economy, which is the biggest economy in the Eurozone, facing with more challenges, and it can affect the European economy as well. Then on Tuesday, we had German GDP again, numbers from Germany. In the third quarter, GDP was flat with the 0.3% annual growth in the third quarter. In the United States, ADP employment changed with more than expected, 13,000 jobs lost. We had a job loss in the United States. About the job market and labor market, I have to say that this AI effect in the labor market, there are so many talks about that, how AI affect the market. What we had so far and what we understood that the companies, they didn't have a firing because of AI, but they had the less hirings. That's the difference, which means that the companies, they could increase their productivity with holding the same amount of the employees, same numbers of the employees, but with the support of the AI, they could increase the productivity. That's why they didn't need to hire the new employees. So, that's why I was thinking. I'm thinking that with the AI, we shouldn't be so much worried about what's going to happen for the labor market. Most probably, as I can understand it, it can support the labor market, and we can have with more productivity, more income with the less laborers, less employees. So we will have the opportunities to create new jobs, to create new businesses and opportunities. So it will not reduce the labor number. It will increase the labor number even, but in the different and in the new fields. So that's what we can understand from so far what's happening in the labor markets till now. But it will need a time. I mean, it will need a time till we can understand the more opportunities that we can create with the AI. Producer price index. PPI increased by 0.3% in September. The data which published with the September numbers published at the end of the November. because of the U.S. government shutdown. The core PPI increased only 0.1%. Generally, the PPI numbers were not hot and showed that the inflation is somehow under control, while the demand is lowering. As we can see in the retail sales numbers, the retail sales increased only 0.2%. While the retail sales controllers fell by 0.1%. This shows that generally the demand from the consumers is lower. We have a lower demand, and this lower demand causes the lower inflation, at least for the producer inflation as well. So when there is a lower demand, the producers they're trying to set the prices lower to be able to sell more. That's usually what happens in the market. Business inventories was flat, same as retail inventories. That shows that generally in continuing of this sales in the retail market, we can see this inventory is also lower inventories or not changing the inventory numbers. It means that the businesses, they are not so happy with the selling and they are not positive about the next sales. That's why they didn't increase the inventories. Don't forget where these numbers, the business inventories, it was for the August. It was sold, I mean, the July with the numbers which published with the July. So we will have the numbers for October soon. November, for September and October soon, but most probably for the September, for October numbers, we should have some more positive data for inventories, as the New Year sales usually affect the retail market as well. So the retail sales, after some weakness that we had previous months, most probably we shouldn't be so much worried about that, as we're getting closer to the New Year event that can increase the retail sales. Wednesday, it was an important day with the central bank meeting in New Zealand, which the RBA had cut the rates by 25 basis points. The reason of the cutting the rates by central bank in New Zealand is mostly because that while the inflation is somehow under control, the economic growth is facing more challenges. That's why the central bank, they cut the rates to support the economic growth. When that was very expected in the market. At the same time, we had inflation worries in New Zealand as well. The inflation, which is already low, but with the changes that are ongoing in Australia and China, there is some expectations of increasing the inflation. That's why there were some policymakers in New Zealand that they were not supporting this just like the two sides or two wings of the two parts of the policymakers. They were supporting of the holding the current rate at 2.5%, as it's also not so high for the comparing with the other economies. Anyway, that's they cut their rates, but for now, that's why they signaled of ending the cycle, this rate cut cycle for now. That's why even thought they cut their rates, but the New Zealand dollar got some support after the meeting. In Japan, core inflation increased to 2.2% from previous 2.1%, the data which published by the Bank of Japan. Looking at the data in Japan, generally the last week, we had a more chance now. I mean, it increased the chance of rate hike for December meeting, and there is now more chance if we see that probably December 18th, if I don't mistake, that the Bank of Japan will have the policy meeting, and most probably we're going to have the interest rate hike in December with the numbers such as inflation and the retail sales that we had and GDP numbers also. That was far better than expected for the last quarter in Japan. In United States, we had the durable goods orders, which durable goods increased by 0.5%. The headline increased by 0.5%, while the core durable goods orders increased by 0.6%. Generally, they're not such a good numbers. They're not the brilliant numbers, as we can see the retail sales, retail inventories as well. So this says that the consumers generally, they are not so positive about the spending the money. On the other hand, the initial jobless claims fell to 216,000, which is expected just like to stay around this number at the next week as well. Crude oil inventories increased by more than 2,700,000 barrels in the EIA reports, which means that right now the energy market is fine, is acceptable levels, and the production, well, you could see that rig count is full, that the production is full. The other I mean, higher inventories, especially for the for both oil and the gasoline. This shows again one more time confirming of the idea of less retail sales, because the gasoline sales also was less than expected, lower than expectations, and comparing with the previous years, we can say that the consumers, again one more time, that the consumers, they are more cautious right now about spending their money. Thursday, we had a retail sales number from New Zealand, and we saw that the retail sales in the third quarter increased by 1.9% quarterly, but in the third quarter. And we had, again, we didn't have much more. Yeah, GfK surveys we had from Germany, and we saw that the GfK German consumer climate slightly get better from minus 24.1 to minus 23.2, but still the minus 23.2 says that again, the German economies really should be, the German policymakers should think a little bit more seriously about the economic condition in Germany, especially at the current situation with the current data that is going on. Friday, we had GDP numbers from different economies, including the French. We had a French GDP increasing by 0.5% quarterly and annually at 0.9%. Inflation numbers in Spain at 3% shows that while the Spanish, they have the highest inflation among the Eurozone with 0.3% still, but it's still somehow, we can say, stable around 3%. In Germany, inflation printed around 2.3% previous week, while the unemployment rate was still at 6.3%. Generally says that the German economy somehow getting stable, but weaker, in a weaker level. GDP numbers from the Canada also we had on Friday, which increased by 0.2% monthly in September, but generally in the third quarter increased by 0.6% annually. In the third quarter, we had 1.4% GDP growth in Canada. Not such a good number. For October, we had the GDP numbers falling by 0.3%. That was generally what happened last week. And for the week ahead, if we want to talk about the data we are expecting to see, we can start the week with the PMI numbers. This week, we're going to have the manufacturing PMIs mostly on Monday, and then non-manufacturing or the service PMI numbers mostly on Wednesday. We're going to start with the PMI numbers, with the manufacturing PMI. Generally, I can say that the PMI numbers, manufacturing PMI should be, in most economy, we are expecting to see the lower number, weaker number. Like in China, we expect to see it falling from 49 to 49.2, and in most economies, it's going to be less than 50 less than 50 expansion zero. About the service PMIs, while they are expected to be slightly better than manufacturing sector, but still, in most economies, we expect to see the service PMIs also to get slightly weaker. For example, in China, we expect to see the non-manufacturing PMI to fall slightly from 50.1 to 50. In other economies, it's the same thing. We are expecting to see, for example, the manufacturing PMI in Spain to slightly ease from 52.1 to 50, around 52. In Germany, we expect to see manufacturing PMI from 49.9 to around 49.5. Eurozone numbers expected to stay generally unchanged at 48.4. In United States, we expect to see the manufacturing number PMI from the ISM survey to slightly ease from 48.7 to 48.6. Generally, just like we're not going to have big changes and big surprises, but generally the numbers that we're expecting from the most economies is going to be weaker than previous months and expectations. Tuesday, we're going to have the inflation numbers from Eurozone, and we expect to see the inflation in the Eurozone is sitting around 2.4, 2.3%, 2.2% for the the total, I mean, the headline inflation and core inflation around should be around 24 to 2.4, 2.5%, not big changes, while the unemployment rate supposed to stay steady or remain steady at 6.3%. Not surprised. During the week, you're going to have so many speeches, and those speeches will be very important, not from the Europeans, from the Americans, from the Japanese as well, because we're going to have we will have the better idea of what the central banks is going to do at the last week, last month of this year. That's why don't forget to follow the speeches. Wednesday, we will have the service PMI numbers, and as mentioned, we're going to have PMI service PMI's numbers slightly better than the manufacturing data, but again weaker than the previous month. Generally saying that the economic activities get slightly weaker. And again, yeah, we will have this from the Eurozone, European economies, and again from the United States as well. In the United States, we expect to see falling slightly from 52.4 to 52.1. Thursday, we will have the retail sales numbers in Australia, which we expect to see a slight increase by 0.1% monthly and 1.2% annually. But the retail sales generally is weaker in Australia compared with the previous years. Even thought we were getting closer to the new year, but still didn't affect the market and the consumers in Australia also facing the same problem as what they face in China and starting some we can see in the United States as well. However, so if you compare between the economies, U.S. Retail sales is still much better than other economies. Friday, we're going to have the most important day somehow of the week with the personal income and spending numbers from the United States, but still we're going to have the labor market data from other economies such as Canada, which is expected to stay unchanged. The unemployment rate at 6.9% or slightly get better to 6.8%. In Eurozone also, we'll have the labor market data such as employment change and which is expected to stay 0.1% not change, not surprised, same as unemployment rate, which is expected to stay unchanged at 6.3%. But the market will focus on US PCE price index and core PCE price index. While personal income and spending, both of them expected to improve by 0.4%. The core PCE price index, the Fed's inflation number, it's expected to stay remain unchanged at 2.9% with 0.2% monthly growth, while the PC price index with 0.3% monthly growth is expected to slightly increase from 2.7 to 2.8%. That's going to be the most important inflation number before the Federal Reserve meeting. And if we see the same numbers as expected, I mean, the core PC price index at 2.9% and PC price index at 2.8%, we can say that inflation is still sticky, and that can increase the chance of the rates cut, which is right now is moved to more than 85%, which is we have more than 85% chance for the rates cut. If we see these numbers, most probably this chance will fall much less than 85%, and that can support the US dollar if we see these numbers and put the pressure on the stock markets. Let's check the charts to see that with these numbers, what we can expect from the charts. The market risk with the holidays, then with the market close that we had in one hand, and the ongoing peace talks between for the Russia and Ukraine war. Generally, the market risk is slightly eased to around 18.60, 18.50, but still this way higher than expected. And for the week ahead, we expect to see again the market risk to increase. I mean, with the geopolitical tensions going on, geopolitical tensions in one hand, and talked about what the Federal Reserve is going to do, we will have the more risk in the market, and that can again support the dollar index above 99, which is around right now at week close with the 99.40, down from 100.30 that we had last week almost. But generally, the dollar index above 99, and it's the positive, and we expect to see again the week ahead around this 99, slightly higher maybe. And if the inflation gets just like we have the hot numbers, if we'll have the hot numbers in the inflation market, same as the numbers that we're expecting, or even higher than these numbers, then we can say the dollar index can jump above 100 level. Weaker dollar index in one hand and uncertainty in the stock market. When I'm talking about the uncertainty in the stock market, it's mostly because that market still thinks that the AI related companies, they are overpriced. Even thought the Nvidia was positive. Nvidia's reports, income reports, earnings report was better. It was better than expected and supported generally the tech stocks. But still, we can say that there is a doubt that either is profitable to invest in the AI market or not. That can put the pressure, still continue putting the pressure in the tech markets generally and tech stocks. That's why with the things going on in the stock markets, and talking about the stock market and showing the gold chart, because they are so related to each other. So these ideas, that this mindset that I was talking about, put the pressure slightly, can put the pressure on in the stock markets and the stock prices, and most probably we will not have the new all-time high. So, and getting closer to the end of the year also will increase the sales somehow, the take profit and sell in the stock markets. And all of them, they increase the demand for the safe havens, for the gold. And that's why we can see the gold price about 4,200 right now. And that can continue, and that can continue for now. We can say that the demand for the oil still, demand for the safe haven gold, safe haven still can continue, and that support the gold price about 4,200. About the energy market, we are not going to have any surprise from the OPEC meeting on November 13 that we had already. The OPEC meeting, the thing is that OPEC is not going to change the plan. They already say that they are not going to increase the production in the first quarter, and we are not going to see any changes there. After 2020 caused by more than 2 million barrels. As you know, they started a few months ago to increase the production by 137,000 barrels per month to get closer to the 2 million barrels cut that they had, and they were increasing each month 137,000 barrels. And they paused this plan for the first quarter of 2026, and we are not going to see any changes most probably there. That's why and also, in one hand, and on the other hand, getting closer to the New Year holidays, usually we have more travels, and that can increase the demand for the oil and energy. Well, the economic data is not so brilliant. Putting all these numbers together, we can say that, okay, for the energy market and oil market, we are not going to see any surprise. That's why WTI prices around $60, a little bit higher or down, but around $60 is still the number that we're expecting to continue around us. About the stock market, I mentioned, I already explained. So generally we expect to see the side movement with the downside tendency in the stock markets, not just in S&P 500. We can see the same for the Nasdaq and Dow Jones as well, especially if we see hotter inflation numbers. That pressure on the stock markets can get slightly more than the market expectations. Anyway, not positive to see the new highs before New Year. In the cryptocurrency market, the Bitcoin couldn't increase about $92,000 and now still under pressure. We can say that fundamentally we are not we don't have any market mover there, and technically also under 92,000 and 94,000, the Bitcoin still, it's a downtrend. In the bigger picture, the K pivot is sitting at $97,000 around this, 97,500. And as long as the Bitcoin is trading under $97,000, we can see that the trend is down. The trend is the bearish. Yeah, that's what's happening in the market previous week and what we're expecting for the week ahead. If you had any other question, don't forget to write in the comment section or try to get back to you as soon as I can. Have a good time. Bye.